Hello, folks. Brandon Chapman with you today. This is a Monday edition of TheoTrade's video, and it is the 9th of June, 2025. And boy, we are edging higher today. Right now, the S&P with about an hour and 20 minutes to go before the close is at 60.14. Will anything stop this runaway train of the market? And boy, you look at the VIX. VIX is even slightly higher today, or was. We're kind of fading back right now. What I'm watching right now in the market is the potential for the reversal. But guess what? Frequently leading into highs, we see that last gasp of short squeeze activity. And that's exactly what we're going to talk about today. How to spot a squeezequake before it erupts. And I get it. You don't know what a squeezequake is unless you saw my presentation a couple of months ago. We're going to kind of address that with three potential opportunities that may be erupting and maybe in the midst of erupting right now in the market that may create the last gasp of this rally in the market. Now, why do I say last gasp? I'm just saying that the VIX right now is pretty dang low, right? The VIX is falling. We're near lows. We're at 17. Well, something I like to do is to take a ratio of the 3 months to the 1 month VIX. If you read my newsletter over the weekend, I talked about this. We were knocking on the door on Friday. Basically, the 3 month VIX was 19.3% higher than the spot VIX. That's that peak in the yellow line right there. You'll see it right there. It's 1.1938, 19.3, 19.4% higher. What does this mean? You start to get over 20% higher. And basically the market's telling you, institutional traders are telling you they're expecting a high amount of volatility in the next month. And what I'll let you know is a high amount of volatility does not generally result in higher stock prices. It results in lower stock prices. So right now we're seeing the market just kind of grind it out. We're up 0.25% today. The VIX is up slightly. If you look at SKU right now is hovering around 138, which is historically high. I would love to see this get back down into this area, which really cracks open that upside without seeing a major sell-off in order to generate the moves. And so right now, what we're expecting in the S&P is that we may grind it out this week. But as we're grinding it out and we fail to sell off significantly, it does open the door for areas of the market to start to outperform. You'll see gold moving up the list. Huge trade today in gold. It is part of Ghost Prints, which is my mastermind. We meet weekly. I publish, significant option trades and other prints in the market every single day for them. We structure trades around them. So far, so good, right? For the first 2 months of this program. But what I'll say is that we're following this sort of activity that I'm going to talk about today. Now, let's get back to what a squeezequake is. When you buy calls, so let's bring up something here. Let me bring up BGS. Okay, this is B&G. If you look at here, Foods Incorporated. Now you see today we're getting a pretty significant move. In actuality, we looked at this last week, but today we're seeing a big move in the stock. It's up 8%. We're also seeing some significant option trading activity in BGS today. This is, we go down here to the time and sales. We'll bring up here, this is the 18th July, and you'll see a lot of green. What does that mean? They're getting filled out the ask. Essentially, you have 361 calls bought in one trade at 20 cents. Who's taking the other side of that? I mean, this doesn't even have weekly options, right? That's an 18 July expiration right there, 2,300. 2,300 contracts today, mostly bought. What happens is there's only 706 open interest previously. The market maker ends up having to take a lot of the other side of this trade. So if somebody's buying calls in big quantities, these are institutional type traders in here. Guess who's selling them? The market maker. If the market maker's selling them, they're basically bearish, de facto bearish on BGS. And what does that mean? Do they want to be bearish on a stock that's up 8%, maybe up 8% tomorrow? You'll see previous times where we've gotten big moves. This is what we call a squeezequake, right? Where the market maker's basically forced to hedge through buying long stock. Now we have this positive feedback loop. But what happens if you have a stock like BGS that also has a significant amount of short interest? I forgot to bring it up here because I had to restart my computer, but let me bring up something here. So I'll bring up finance yahoo.com, and I'll bring it up here in the main screen in just a second. But anyway, so let's bring this up here and say, okay, well, what happens? Well, here we have a stock in B&G Foods. We click on the statistics page and you scroll down here, you'll see what? As of 5:15, 33% of the shares, the float, which is basically the shares outstanding minus restricted shares held by insiders, 33% of the float is shorted. That means they've sold already. And if they get squalls, meaning the price goes up, they may be in a panic to buy back the stock. And based on the average volume, it's going to take about 5.5 days. All right. This is what the Squeezequake is. You have the option trade that leads to the market makers hedging, then the markets makers hedging through buying long stock, then puts pressure on the shorts. The shorts then have to buy to cover to exit. And these create these significant moves like BGS today. And guess what? These moves can be very, very big and sustained sometimes. We've seen big time squeezes in some of the quantum space. Back here, for example, what drove QBTS from 7 to 20? A short squeeze, a Squeezequake, option activity leading to what? Short covering, right? RGTI, again, another one back here. This is what we call a Squeezequake, an option hedging, market makers having to buy, called a gamma squeeze, buying calls in this case, buying stock to hedge short calls, then leading to shorts having to cover. This is the kinds of moves you can experience at times. And right now in our ghost prints, we're seeing Plug right now. Plug's making a big move. We've been waiting a while for this. We're finally getting there. We're looking to close the trade at 200%. It's about 188.9% right now. A little more, baby, and we're out. But the idea is these are the kinds of things we're looking for. Even last week, I took a trade using the option activity in SILJ late in the trend at this point on Monday. But you saw in the junior silver miners, a bit of a squeeze in the stock, gamma squeeze. We got the big pop. We closed that one out for almost 400% last Thursday. So the point is, this is the power of these moves that you can experience when you start to identify significant option activity that creates the gamma squeeze that then parlays into a short squeeze. And so again, BGS is one of those I'm looking at for this week, looking at a move maybe towards 6, maybe even 7. It's hard to say how much these can move. Again, we're just looking for the big multiple 2, 3, 400% on these kinds of short-term trades. But long call, long put trades. In this case, it's a call option for BGS. Another one that we're going to talk about today is on a stock called TDOC. Now, just realize these stocks are not necessarily good companies. And guess what? They don't have to be, okay? These are mechanical things that drive the price. Today in TDOC, for example, we're seeing trade. This is for the 13 June expiration. I got a position. I just bought this for 5 cents today or 6 cents. 10,000 contracts traded, mostly buying on that $8 call option. Again, the market maker can't offload all those, right? So what do they have to do? They're taking short call positions, and they've got to buy stock to hedge. Well, guess what? They don't have to hedge a whole lot right now because we're pretty far out of the money, pretty low delta. What happens if this stock starts to move towards 8 or through 8? All of a sudden, the gamma squeeze is on. Is this a Squeezequake candidate? Well, we got to check the short interest. Oftentimes, TDOC does have higher short interest, and you'll see right now today, $164 million share float, 13% is shorted as of right now. The ratio moderately high of 3.93. Is this potential short squeeze as big as what we've seen in BGS? No, but is it pretty similar to a lot of other companies? And what do we need? We need a match. We need something to spark this thing. And if we can move 2 and through 8, this can create a major short squeeze. You've seen past ones. We go 983 to 15. This is not a fundamentally based move. From 9 to 12, this is not a fundamentally based move. These are called a Squeezequake. It's a gamma squeeze to a short squeeze. And we're seeing the option activity there today that creates the potential. We already have this short interest in there. Now we just need a match, and we're seeing whether or not this thing can move this week. You'll see I have a long call trade at 8, betting on a move this week. We'll see what happens. And the final one here, again, this is another setup here, SPCE. Again, is this a good company? No. Do they make money? No. Do they have cash? I don't know. Do I care? No. Do I care what the fundamentals are of this company? No, I don't. What I care about is there something intrinsic in terms of mechanical that can drive this price apart from fundamentals? You'll notice back here in the earnings, the stock went from 330 back to 660, doubling in price in a couple of days. Yes, that was an earnings announcement that created the momentum here. But again, conditions are created based on what? Based on this sort of activity. In this case, it's a 13 June expiration, 17,000 contracts. That was the 350, the one I was focused on earlier. This 10,000 contracts, this is building up to 17,000 right now, but mostly bought at the 350. All we need is the price to move. And again, the significant amount of call option buying can lead to market makers having to buy stock to hedge. And then if we can squeeze the shorts, you've already seen what this can happen. Back here, this was a relatively mild squeeze, went from 6 to about 8, went up 33% literally in about a week. What am I looking for here? Well, again, if I go over here, I'm saying I got a $4 call. Well, if I'm paying 9 cents for it, 10 cents right now, if this thing can go to 5, that option is now worth $1. If that option can go to 4.50, if the stock can go to 4.50, that option is now worth 50 cents. If you pay 10 cents for it and this goes to 50, that's a significant multiple. It's exactly what happened last week on SILJ. So the idea is what we're talking about here is something that we've penned at TheoTrade for my Ghost Prince Mastermind, something called a Squeezequake. Thanks, Ross. And this is exactly what we're looking for in identifying these potential opportunities. And you don't have to trade it one way. For this week, for those 3 trades, I'm looking at buying out of my calls, seeing which ones can hit for big, big multiples. You could buy more time. You could trade spreads. There's no one way to trade these kinds of prints. But again, what I'm trying to help you identify is where the opportunities are and how to find them. And it just so happens in Ghost Prints, we have a scanning tool that will help you identify these prints. I'm posting multiple big trades every single day, prints that you can utilize. And these are 3 of them today that may or may not work out. These are low probability, high reward trades. But the point is, if you're paying 5 to 10 cents for these types of trades, you only need one of them to pay off. And the reality is, if you can have 400% weeks, you can pay for a lot of losing trades. And again, these are ones with high potential, no guarantee, but high potential movement. Something just needs to get started. Something needs to ignite them. And again, I'm hoping that happens this week for these ones. And the option activity is part of that process to accelerate the potential squeeze in these stocks. Well, folks, that's what I've got for today. We'll catch you back next week on the video. Thank you.